Hey everybody, this is Chris with orbtraders.com going over the September 16th, Tuesday's New York Session trade plan. Starting out with the news, we've got core retail sales an hour before the market opens. That's at 6:30 Mountain Standard Time or 8:30 if you're on the East Coast. And jumping right into the levels, we had a contract change. Technically, you can still trade both, but we will have those expire this Friday. However, the volume's already shifted over to the new contract. So if you are charting on the continuous contract, which is simply / and your product on Thinkorswim without the contract, this is the continuous contract. So if you are confused with any price on your DOMs or on your charts, whatever prop firms you're with, make sure you are on the current contract. So if you look at the NQ continuous on the left and you throw the NQ current contract on the right, you will see the price matches up. So we're at right now 24,541s. If we flip that back to the previous contract, you can tell there's a huge price difference there. So make sure you're trading on the correct one. Same for the ES. If you're looking at the continuous contract, you need to be on the Z contract for 2025. And you can see the price there aligns. If you are trading the U, make sure you chart on the U. Do not chart on the continuous because the prices clearly do not match up. So going into charting, and this is why I normally just chart on the continuous contract. You can chart on both, but pulling up the ES and the NQ, I've got my level set going into tomorrow. Our prior day high and lows, our overnight opens, the Sunday opens. That's SO, and then of course our prior day highs below us, along with our prior day, our prior last week high. Our last week highs also below us. And then I marked out just the close on Friday. In my head, I'm just thinking, okay, this is where the last action closed during the RTH session for that contract when the majority of volume was traded there. But now that we've shifted over, going back to the trade plan going into Monday, I want to take back this notion that we will simply retrace and fill this gap. When you have a rollover, that's not always the same versus, say, this week wasn't a contract change. It's very likely that could retrace. Now, I'm not saying this won't retrace, but I am not looking at it in the same context of an unfilled gap. Sure, yes, on the continuous, it's not filled. Sorry if this is confusing, but the likelihood that it's going to just retrace because we have a change in price, it's not something I'm particularly paying attention to. We could certainly continue to just go up, and that is what the market has been doing. If you look back on the 20-day 1 hour, we are in extremely bullish action for the majority of this whole summer and this whole year. We can go even further out, looking at the 1 year daily, and we can see our lows that got set back in April. Back in tariff announcement times, or when that came out, we have just been going up. Same for on the ES. If we go back, we were down at 4830s. We're all the way up to 6600s. So, and there was a prior high that was breached back in June. And we have not retraced and came back down to that level. So I could certainly see continuation of our highs as we progress into Q3. Now, remember this week we have FOMC on Wednesday. So I'm not going to be looking at the pre-market print that's coming at 6:30, but you can mark it out if you are trying to do a straddle. Or to do some trades overnight, depending on where you're at in the world. Maybe it's in the morning for you. Obviously, we're going into the Asian and London sessions at all-time highs, and you're going to continue to see the volatility measures go up if we continue just to slam forward into higher prices. And looking at today's action, that's what we had. A lot of congruency across the volatilities. We had the VIX go up. We had the VXN also go up. So a big internal to monitor for today was certainly the tick and what was the tick doing. So going back just to our levels for tomorrow, we're going to be doing the same strategy, 15-minute orbs, and our breakouts once we have a breaker and a confirmation candle. And one thing I will point out, just looking even at today's, we turn the study on and we see our 15-minute candle breaks. Obviously with the the NQ, there's a lot of price or higher range than the ES. So I like to look at the highs of the breakers and the lows, because essentially I'm measuring what this breaker candle is and how wide of a range this is. So this candle had almost 30 points of range, and a lot of times when you go into these trades with the NQ and you're trading minis, it's not very likely for you to trade one mini and risk 30 points on most accounts. I'm not saying that you can't, but an easy way to mitigate all of that is dropping down after you get a breaker to a lower time frame, and you can play a much closer stop loss. So you see where I have these lines for the high and the low of that breaker 5-minute candle. Well, now we can see the 1-minute breaker is down here, and we can simply wait for a breaker above that 1-minute candle, get an entry, and still hit our daily goals. There's plenty of action that happened in the first 30 minutes today to satisfy that on the NQ. And then of course, if you're trading down to the 5-minute opening range, you had a decent breakout above. Some of it did come back down though, so you could have been stopped out depending on where you put your stop. But just to draw into some context on how to manage the range on the NQ compared to the ES. If this was the ES and it's on a 5-minute, you could simply, most of the time, just use the bottom of the breaker candle as your stop loss. But for the NQ, I would recommend looking down at your 1-minute candles, having your breaker complete its formation, look for the candle to break that, and then you can leverage this as your stop loss. Seeing that this 1-minute candle, the range of that was only 10.5 points. I typically go with 40-40 for my ticks on the NQ in terms of stop loss and TPs, but of course you can manage those dynamically depending on what daily levels you have set, what key levels you're monitoring, and what indicators that you leverage. I like the 9 EMA, the 20 EMA, the 50 SMA, and the 200 SMA. There's the band in there. I mean, it can kind of just add some noise. So a lot of times I'll just come into my studies, I'll turn things on and off. The simpler the chart, in my opinion, the easier it is to trade and not get lost in 1,000 different indicators. And then of course VWAP is on there. So again, that's the 9 EMA, the 20 EMA, and we have the 50 SMA and the 200 SMA, and then your VWAP. And then as well is the opening range. Obviously that gets plotted, and your opening range midpoint. A lot of times you see a retracement back to that. Clearly today we didn't have that. We had a handful of attempts where it looked like it was going to come down, but if you keep looking, monitoring the tick, you'll notice that the majority of the day was spent well above the zero line. So we can go back and look. Let's look at the NYSE, the NYSE tick. And if we switch this up to let's actually go to a 5. We see the majority of the morning was all above. I mean, this is up until 9:15. There was one candle that went below zero, and it didn't even go that far. And also wasn't even until 11:15. So this is 1:15 Eastern, where the first extreme came into play on the tick. And if you're trading the ES, let's go back just to show today's price action on the ES. All morning we were continuing to grind up higher, and it wasn't until this pullback you see the sell-off and the tick flip below zero down here, but we continue to stay above. And then of course we hit a high, retrace back down, touch the top of the opening range high, and then again the tick goes right back above zero. And still with some of this selling off here, we are oscillating on the other side, or oscillating on the zero line and going to the other side. But you can clearly see how the tick can help you out being on the right side of the trade. And many times there are players out there fading what the tick is doing. So if you're printing on extremes like down here or here, what is happening on the actual price of the product. So we're hitting extremes, and it's natural to come back to the zero line, and you're at the bottom of the opening range low. Well, that next tick started to print back up and hit towards the zero line again, and we broke above the opening range on the ES again. And then on the NQ, you can look at the initial breakouts, and you're well above the zero, hitting extremes multiple times. Came back below, but we didn't go into the extremes, and we still stayed above the opening range mid. And if you were looking for any sell-offs to go back to the opening range mid or even lower, obviously the tick kept the momentum to the upside and continued to carry to the upside. Even though we had some also at this point, this is like 9:30 in the morning, starts to print below the zero. It's oscillating on the zero line. So overall, a bullish day to start the new contracts out. I will share these levels out. I think that's pretty much all I have for going into tomorrow's action. I don't have any fibs drawn up. I kind of cleaned up a lot of this action because I want to see more price form. Now, of course, you can certainly throw some fibs on here, at least on our lows. So the best way, in my opinion, of drawing a fib is you want to move an explosive move generally out of an area of consolidation. And you can certainly just look on the chart and look for your swing low and swing high. So for this session, the swing low set down at let's see, our lows on the NQ 317 3/4 to the high of the day brings your fib support zone back into the opening range, and then your targets are above 613, 704s, and 860s. But if you wanted to actually utilize the RTH session, that's certainly going to change. And what you'd want to do is grab your first low out of the break of a range. So here you have a bit of a range, and here's the low of that break, and you take it to your first high before you get a candle that's red, a selling candle that goes the opposite way. So you're carrying this up to the top, so you go low to high, and now you're simply looking at the fib support zone for a potential entry to the long side, looking for targets above. Here's your negative 23, here's 68. The one target that has not been hit yet is 24,577s. So this would be the level that I would primarily be interested in first, to see if we can come back down and maybe tag this and go up higher. So I'll leave this on the chart for the NQ. It's a little bit of a different story on the ES, because that essentially would have been broken. The ES had its range, and then you grab the low of that range and you bring your fib draw to the high here, but it broke the 78 twice. So I would be invalidating that and removing that draw, looking for a new candle that breaks the range. And clearly we had one here. This is on the 5-minute, and we had a wick that came through, but it closed above. And sorry, let me zoom in on this. It's a little bit difficult, especially when it's near MOC, near the end of the day. I particularly wouldn't want to keep this fib draw, but it's the closest thing, I guess, to the most recent fib from the RTH session that you could keep on there. This is literally in the last 15 minutes of the day, though, so I likely would not hold that draw. I'll be looking for a different draw and leveraging the full Monday session fib draw. So looking at the lows, set back at 66.41 and 3/4, and taking that to the high of the day, and seeing if we tag any of the fib support areas. Let me actually make sure this is 81.25s. And going back here, this was 75s. So then our fib support zone directly below that high, if you draw this over, let me actually just extend this to the rest of the overnight session. I would be monitoring this area for any potential pullbacks, and for longs for targets above at 66.90s, 67.05s, 67.30s. If that doesn't make sense, feel free to ask questions, use the community chat, and I think that's going to wrap it up. Hope you guys have a good evening, and we'll see you tomorrow. Take care. Bye. Hey everybody, this is Chris with